Hello and welcome again at Stocks Advisor. In today's episode, we will talk about EBON International Holdings Incorporated, traded at Nasdaq, ticker name EBON. Well, first of all, what we need to note here that EBON is a company with sub-billion market capitalization, meaning that it's for the moment 767 millions. And why is it important? Because for companies with such market capitalization, a strong volatility can be happening in both directions, upwards, downwards. And indeed, you can see it here for actually no period from beginning of the year. We went all the way from level of 4 and actually we went all the way to almost 13, even higher, with the highest being 1362 and the principal level being at about 1241. So this is a huge trading channel and it went with huge waves. And now what we see that this enormously volatile, it's even hard to call it an upwards channel, but just technically speaking, it was. This upwards trend is now broken and we are declining. So we are declining already with shifted decline channel. What does it mean? That actually from the period of middle of March, you can see we started major decline, and we had those previously. But if you look into the channel patterns, it's very interesting. So the first decline that we had, the first wave, it went with a classical decline channel, and then this channel actually recovered all the way to the previous level, and then the level of around 1241 worked as a very strong resist, so the price started to decline again. And then we had, let's say, let's put it here, we had the second decline channel, and then it was shifted. So it's very rare pattern when instead of rebounds and decline, you have a shifted decline. So the pattern, the channel just shifted, and now what we see, we are actually bouncing from the support level of 386, and all expectation was, of course, okay, we might go and rebound higher, but didn't happen. There was a very strong, eventually it became very strong resist level that was also partially formed by, let's say, second half of January at about 446. It worked again here as a resist, and we are declining. So we might decline even further. And if you look at the bigger magnification, there is no way to decline further historically, but we can decline further just technically. So also what could be happening here, you see that after finishing MACD, a secondary wave, we go slightly up, but we decline. So it will be reverse behavior when you increase the MACD, but the price goes lower. Therefore, what might be happening here, we could go a bit lower levels than the current ones. So we really need to be careful and know what we do. Of good things, what is still important is that after having the second shifted decline channel, we've had the first rebounds. And you can already see a slight improvement of the angle of moving average 20, which usually is a very strong indication for near coming, let's say, major recovery. Similarly to what we saw also in the action of November, December, you see it was a similar situation. We had actually here the channel, and then it was, so we had this channel here, then this channel similarly formed lower channel with the shift, and then we had rebound. So now we are repeating the situation from the second channel with the shift, and we might go for rebounds here. So with this being said, how to trade here, how to buy. So we just need to observe the most safest levels to enter. And if we do so, actually those would be below the current price and here. So it's very narrow, but is actually active. We can put a little bit lower, is active already once we open. So it will be between 382 and 405. So let's write it for ourselves as a call out. So 382 and 405. So this will be the first channel to buy, again hoping that this support level of 382 will work again and we will rebound. If not, we can go a bit lower, and since there is no historical information on how we could decline, we can only take here a mathematical approach and actually look at the distance between moving average 20 and the price, because usually what happens on these kind of patterns, moving average 20 works as a very strong attractor, and whenever the difference is much bigger, the price rebounds there. So what we could do, therefore, we just take next, let's say 15-20% decline from the current price action with the, of this channel. So being 382, we can say that the next one will be therefore about 380, 340, and you can say all the way to 3. So this will be the next channel to buy. And actually, to be more precise, we can put it just mathematically as well. So let's say between 3 and 340. So this will be the second channel to go in. And then the distance between moving average 20 and the channel will be much bigger, and it should work as a very strong attractor. We will talk about this rule and about this pattern, very rare one, usually not discussed, because this is really for, let's say, high level technical trades. And as you know, the most interesting things are usually not discussed, in not that obviously discussed. You can see a lot of discussion on simple patterns, on candle patterns, but themselves they don't work all the time, because you need to have extra information, and this extra information usually is not discussed, because this is really those professional tricks and tips that people keep for themselves. So this would be the second level to buy, and again by that time there will be a big difference between the moving average 20 and the current actually price. Therefore moving average 20 will work as a very, very strong support. So if you put it here, you see that between, by the time the price and moving average 20, it will be 32%. Usually this is the very, very strong repulsive channel, and this is actually it. The lower part, if you want to take just to mitigate risks, we just take it another 15%, and therefore we demagnify a little bit just to see the levels. Let's say this would be all the way to the level of even lower, so it will be, let's say, 270. We can just write it here as a call out for ourselves. So everything that goes lower than 270 would be the third level to buy, really based on risk mitigations due to any possible negative catalyst, if any, coming, but you can barely imagine this coming for the company. So this is already quite low, and actually it's not really needed to discuss the third level, but as always we do it to our channel, so let's do it again. And with this being said, these are 3 levels to buy through. Asking yourself how you buy through it here, it's still classical trade. So first of all, speaking of profit, because this is very fast moving, so the profit expectation is between 15 to 20%. And if you talk about how to buy through, so this is a classical 5 portions play, because this is already quite low and quite strong, meaning that the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel, you can buy with 2 portions in the second channel, and if we decline to the third one, so if we go lower than 270, you can really buy with remaining 2 portions. But this can be happening only if there are some negative news, because as I said, the rule when a moving average 20 is bigger than the price on 20% plus, and when you have other two moving averages, 50 and actually moving average 200 on, let's write it here, on top of moving average 20, actually then it's a very, very strong indication of the quick rebounds. This is very important. You can rarely find it somewhere being discussed, but this is really strong. If you check this historically for any company that is higher than $500 million, this works like a clock, actually. Very strong indicator. And that's what we will exploit here in this trade. Very unusual situation, because when you don't have historical resist levels, you use this kind of indication, and it works really nice in let's say a majority of time. So with this being said, that's all for EBON. A little bit unusual way of trading, but can bring a lot of profitability because we are already very low, and we have the shifted channel trade. So whenever we go lower, it should be a very strong rebound form. So with this way of trading and with this non-linear way to average down, should be really nice optimization for profit versus loss, and should give you a nice opportunity here. So good luck with this one, and don't forget to subscribe to our channel. If you're first time watching this video, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.